Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for the segment, we have Logan Allin, founder and managing partner of FinCapital, to discuss M&A trends and why there's a surge in new company formation. Logan, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill, for having me as always. I appreciate it.
You got it. What are the M&A trends right now, and how do they suggest where the market is headed?
Well, first half of the year, M&A volumes and values declined respectively by 4% and 12%. We saw a mixed amount of activity, TMT being the largest sector and the most active, accounting for about a fourth of that. And on the fintech side in particular, after 6 straight quarters of bad news and M&A volume decline, it's actually picked up immensely in Q2 with over $1 billion in M&A deals done by both strategics and buyout sponsors. And we expect that to pick up in the second half of the year dramatically. And so we're excited by what we're seeing in the trend line, but it's been a tough 18 months to be sure.
It certainly has. Why do you think there's a surge in new company formation?
Well, I think 3 reasons. One is that founders might be handing off the reins to professional management, waiting for the IPO window to pick up, or the board decides it's time to sell and they're bringing in kind of professional management, and the founders may not be a fit for that nor want to stick around in that dynamic. And then secondly, and unfortunately, in that uptick, employees are underwater on their options in many cases and are thinking, hey, I don't really think it's worth it for me to stick around here. Why don't I go start my own company and control my destiny? Secondly, so that's kind of the spin out scenario. And then secondly, you're seeing a lot of layoffs, unfortunately, and that has pushed a number of those engineering and product talents to explore entrepreneurship, which I think is great. Again, this theme of controlling your own destiny and probably not wanting to work with a corporate or things that are outside of your control. And then third, we're seeing an uptick in replacement entrepreneurs, meaning these are entrepreneurs that might have started a business in COVID and that went sideways, obviously, as a result of that dynamic. And now they're starting something new and trying again. Overall, you're seeing this expressed in an uptick in incubator and accelerator applications, where Y Combinator specifically received an all-time high in their most recent batch. And we think that's a positive for the overall tech sector.
Are you taking a bullish stance then on the fintech market, or are we still in this 18-month bear market?
Very much mixed. We're bullish on B2B fintech business models, but very bearish on consumer and crypto native business models. Those have been under tremendous pressure in terms of cost of capital, regulatory headwinds, and broader macro issues. And so if you're investing in the space or looking at starting a company in the space, we'd very much advise around B2B fintech models. And we see, according to BCG, $1.5 trillion in fintech revenue arriving by 2030, which is exciting, but we think it is going to be a case of the haves and have-nots, both in public and private markets, for these B2B oriented models that are more focused on enterprise and middle market customers.
So what other fintech sectors are growing? You had mentioned B2B. Are there other niche areas that you like?
Yeah, so we would definitely be top-down B2B oriented from a focal perspective in terms of specific subsectors within fintech. Remain bullish on payments, number one. So real-time payments in particular. Everybody saw the FedNow announcement. We think there's going to be a lot of business models spun up around that concept. And then 2, B2B infrastructure and embedded capabilities. And that includes vertical AI. I think AI overall has been overblown to a large degree, and there's going to be far more fundable and long-term businesses in that space, and it's looking a little bubbly. But there are certainly a number of use cases where legacy and incumbents can take advantage of these more vertical AI capabilities, like customer experience and automation around that external-facing capability and more digitization of the consumer and business experience. So we're excited broadly around what's happening in the fintech markets. It's been choppy, obviously, across the board, but we do think we're going to see some recovery on M&A in the second half of this year, and hopefully the IPO market's reopening as well through a combination of what I'm calling FOMO and fundamentals. FOMO in the sense that people want to go out, that might be ready to go out, and then fundamentals in terms of companies that are likely EBITDA positive and will be welcomed by analysts and public equity investors, and not those cash burners that we saw in 2021.
Yeah, I'm sure the marketplace, particularly for public investors, is looking forward to a more fundamental story. That's for sure, Logan. Appreciate the updates as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.